portfolio podcastek.
Hey, I'm Levente Hörnpritot. This is the Portfolio Business Podcast, and this episode is brought to you by Dorsum. Today, we're going to explore what it takes to add crypto assets trading to the portfolio of financial institutions, and to what extent the legislative framework incentivizes such activity. Now, crypto has been on a victory march for the past 1.5 decades. Currently, there are over 10,000 active cryptocurrencies, of which more than 40 had a market capitalization exceeding $1 billion as of April 2025. This massively growing investor interest is just one of the factors that encourage ever more financial institutions to offer crypto assets trading. Other factors, such as the development of the regulatory environment or the approval of Bitcoin ETFs, are also pushing stakeholders to get engaged in the crypto business. Our guest today represents Dorsum, that provides investment software services for high-end clientele, and as such, it has gathered crucial hands-on experience on how to help embrace crypto assets and blockchain technology in banking. I'm joined by Péter Kanti, Head of Business Consulting, Blockchain and Digital Assets at Dorsum, who helps clients understand the technology and its potential. Thank you so much for coming.
Thank you as well. Thanks.
All right, so let's just jump right in because we've got so much to cover. It's a pretty complex topic, right? And actually, the first thing that comes to mind when you talk about crypto is that it's anything but predictable. It's pretty much like a super crazy roller coaster ride. And well, it also requires a lot of appetite for risk. And this volatility is just one thing. The other thing is the technology. And many people, including experts in finance, find it a little bit scary, maybe. They have reservations about the technology. So why don't you just break it down for us, what it's all about and why there's no reason to fear this technology?
Yeah, and technology-wise, to be really simple, I try to be really simple because it can be really deep and really confusing, let's say. The easier is to think about it as cryptocurrencies or crypto assets are like small programs that can represent tokens or coins digitally. So that's the base case. And we can think about it that it lives on a blockchain. And it lives on a blockchain technology, which basically provides the settlement of these tokens. That practically means that who owns what and what transactions can happen. The blockchain itself, many readers and many of the audience may have known that it's a digital ledger. It's a decentralized digital ledger, which practically means that there's a database which is shared across multiple computers. And these computers, based on a cryptographic and sometimes computational, sometimes economic consensus mechanism, they can validate the transactions which goes into the database. So basically that's it, and why they call it blockchain, because it puts these transactions into blocks and connects them to the previous one. That's the logic behind it. But the easiest way is to think about it as a settlement layer, and they live on the settlement layer and use blockchain as a settlement layer. So I think that's it. Besides that, there are other reasons how can these tokens issued and created, but in the technology sense, that's it.
Right. And actually, there are great examples that show perfectly how attitudes can change towards crypto. Just take Donald Trump, for example. He recently called it a scam, and now his crypto assets holdings are worth like $2.9 billion. So
yeah, that's right.
Yeah. So, well, not least also because he introduced his own meme coins, which generated a lot of revenue. But anyway, why don't we take a look at what's in it for banks, actually, in particular, to offer crypto assets trading to their clientele. It's a lot of effort after all, so there's got to be a reason.
Yeah. When we talk about crypto assets, it's always a topic about blockchain as well. It's really important to understand. So, and I'm going to try to answer your question, but I come from a different perspective. So, it's much more interesting to see this as what use cases can blockchain bring to the table for financial institutions. And just part of it is crypto assets. And even in the realm of crypto assets, trading is just a part of it as a use case.
Right.
But yeah, generally what we are talking about today, it's almost a $4 trillion industry. as the market cap just around that, as we talk about now. We can talk about globally more than 500 million users.
That's
active
a lot.
addresses,
That's
which is a lot.
Yeah.
A lot. I mean, I wouldn't say it's a scary thing, but the scary thing is the rate of growth here. And that's what's interesting. And if we consider that from January, the growth rate was roughly 30% in market cap, it's really crazy. And what's happening now is that every country, I mean, every economic region, I would say, maybe it's better to put it, they try to introduce their legislation. If you think about it, yesterday, the US legislatory bodies, the Congress, pushed forward again the Genius Act and the Market Act, which is kind of the US MICA. So everybody sees the potential in it. And what's here in banks, what value can bring this to banks? So I believe that obviously market share or revenue, which comes from this huge inflow of money, as we can see. That's one part. The other part, that it's still an innovative technology, which means that a bank can position itself that I'm using this new technology. I'm trying to offer something in this new technology which can really magnetize some clients which might not be in a bank's clientele now. And also, it can affect the employees as well. I mean, nowadays, it's a problem in certain regions to have, the best talents. Because if you have legacy systems, maybe that's not that interesting for those talents, or maybe you're doing legacy things only. Maybe that's not that interesting for the best of the best to join your company. So that's also one thing. And so generally, because it can introduce new processes, new assets, it really develops a bank, even in that sense as well, besides the revenue. That's how I see it, yeah.
Right. So it definitely adds to the image of any financial institution. And the talent issue you just mentioned, I didn't even think about that one, but that's also pretty compelling. Okay, so let's assume the project gets the green light in the C-suite. What's next, right? What's next? How to get it off the ground? What's the budget people need to calculate with? And, what kind of research does it require? What does it take?
Yeah, my favorite question. It depends, right?
Okay.
I mean, if I have to say anything, I would say that in a size perspective. So, I mean, because it depends on the complexity of the bank, obviously, the size of the bank, the size of the clientele, the size of the business, and how you build up the business. Is it just a small thing? You have partners with it. You want to build it yourself. You imagine it as a new business line, as a new division, which I strongly suggest to every bank that think about this in that way, or it's just something different. And I would say so that compared to each bank's own measurement, there are always huge projects, big projects, medium projects, small projects, teeny tiny projects. I would say it's in the middle. I would say it's medium or a large sizing, and it depends on the complexity, really. And this obviously brings in the question that how can you start? What can you do? I think it's important to put it into context, put it in the context of the company, put it into the context of the company's strategy, and based on that, make the decision. But it's really important that you need a team or an individual inside the bank who really knows the market, who really knows how this works. We call it a crypto champion or a digital asset champion who can be responsible for the content, at least, obviously for the delivery, maybe itself as well. But that's the first step. And then obviously maybe proof of concept, maybe design phases, maybe rollout. So, I mean, the other part is more like a general project management in a way that is really a bank used to.
Right. So obviously you do need some special expertise to get it going and to pull it off. But all in all, what would you say how difficult it is to pull this off? Because, well, we all know from NASA that failure is not an option, right? But McKinsey says otherwise. They say like 70% of such projects basically end up in failure because it's a major digital transformation, right? So on a scale of 1 to 10, how would you rate the success rate, the chances for success?
I would put it differently. I think the biggest hurdle is not in the digital part, but with the transformation part, as usually it is. So it's not about that technically it's impossible to do it, because technically it can be done. I mean, yeah, there are legal issues. There are also other issues which can be handled, but technically it can be done, because technically it's not a big deal. It can be connected to, systems can be connected to each other. The biggest thing is the culture, the organization, some operational issues which may be hard to transform in a bank. I think the most interesting thing is that if we consider a bank who's connecting to traditional exchanges, that crypto is 24/7 and these exchanges usually are not. And this brings in a whole different perspective and complexity into the topic, but usually not on the technology level because, servers can run anyway at night. I mean, IT usually can maintenance it. It's not about that. But with the usual business stuff and the usual business hours to manage these issues. However, if you can manage to pull out the 24/7 capability, and when traditional finance comes in to have 24/7 systems. Now we also have overnight trading for NASDAQ, for example, or New York Stock Exchange. It's much easier to pull this other kind of traditional asset. So I think there's also a value in it. With this transitioning, I think I would say that McKinsey guys are very smart. I mean, maybe smarter than me, that maybe that's kind of the issue with it. Yeah.
Yeah,
but I'm optimistic.
And maybe it's got to do with the fact that you also referred to before, because we're talking about legacy systems in most of the cases, and these are pretty rigid systems, and many are just not suitable, so to say, for such dramatic transformation. But anyway, let's talk about something else now a little bit, which is probably even more important, and that is the legislative framework, because you already mentioned the MiCA, the Markets in Crypto Assets Regulation by the EU, which provides a pretty transparent framework. However, there have been recent changes in Hungarian legislation, and many people are wondering how they impact the market. Also, Revolut is suspended crypto trading for a reason as well. So people are wondering, what's the deal with this whole legislative thing?
Yeah, I think there's a lot of buzz here. Me, myself, was also in a pretty interesting state when I first read about it and tried to, go behind it and figure it out what's happening here. But I think on a higher level, what's happening is there's some kind of new, let's say, more strict rules here in Hungary that were implemented, but they were not implemented because of any kind of special issue. It was just because of these AML and KYC regulations. So I think, and I'm very positive in this, that long term, it won't affect the market. Short term, it definitely affects the market. However, it's really interesting to understand what's happening behind the scenes, because there are two things here: the regulatory changes which happened and the deadline for the so-called CASPs, or crypto asset providers, to be prepared and have MiCA license in certain regions, including Hungary, until early July, the end of June. And as far as I know, I'm always checking the Hungarian National Bank's list of who are allowed to do crypto asset trading according to MiCA, and Revolut was not in the list, actually. So I think that's why.
Well, that explains it.
I think maybe the thing as well. I don't want to go into detail. I just wanted to emphasize that there are certain things happening in parallel, and I'm optimistic about it, that in long term, it won't affect anything. In short term, as we see, it affects some, because there are some exchanges who stop trading as well. I mean, because of this legislation I mentioned, and the Revolut is a different topic.
It seems that what matters is that basically you got to keep your eyes open at all times, right?
Yeah.
But in the long run, you can count on growth for sure and potential.
I hope so. Yeah, I hope so.
Yeah, so this brings us to the last question, which is basically how adding the crypto assets trading to the portfolio basically can be aligned with a financial institution strategy. It's a crucial thing. And it's also great to discuss how that strategy will actually be impacted by this very fact that crypto assets trading is all of a sudden available for the clientele.
If you think about it in a way that, for example, now the clientele has the potential to invest in stocks and bonds and all these kind of traditional assets, and now they get a fourth one, or whichever they offer, so a new one, which is crypto assets, we can think about it that we give to our clients a way to build up a more comprehensive portfolio. And I think that's a good way. On the other way, it might affect the other assets in several ways. So if you think about it, that there's a growing number of people who are aware of crypto assets, and they are learning investing through these assets rather than doing it through stocks or stock investing, for example, then it's a good way for a bank to pull these customers in, introduce them to crypto assets, and they might also start to trade stocks and bonds or invest in stocks and bonds and other kind of things, which also drives up the revenue of the other assets they get the revenue of. So I think it can definitely accelerate the rate that they onboard new investors to their investment divisions. That's how I see it in this particular case. And I think it can totally affect their strategy because they can get new tools, new opportunities with these clients. Yeah.
Great. Well, we need to wrap this up now, unfortunately. Thank you so much. Excellent food for thought. Let's continue this at some point.
Sure. Thank you very much.
Thank you. This was the Portfolio Business Podcast, and this episode was brought to you by Dorsum. Thank you for listening. See you next time.